Welcome, my name is Ayush Elavadi. You're watching Primetime. Let's have a look at today's headlines. ICICI Bank says it will conduct an independent inquiry into an anonymous whistleblower's complaint against Chanda Kochar, the bank's CEO and managing director. IDBI Bank wants to split its retail and corporate banking divisions to bring in a private equity investor in the retail arm at a better valuation. That's a Bloomberg Quint exclusive. Non-BJP, non-Congress-ruled Kerala cuts fuel prices by ₹1 per litre. The price cut will become functional from June 1st. However, the price pinch continues for the rest of India, with IOC cutting fuel prices by a token 1 paisa. European markets reel under pressure before stabilizing as little political chaos in Italy and Spain threatens to spill over to the entire region. European Central Bank ponders over an urgent meeting to discuss Italy. Nearly 10 lakh public sector bank employees have gone on a 2-day strike today in protest of the meagre hike in wage bill. Now, in a big corporate development, ICICI Bank has said that it will conduct an independent inquiry to examine an anonymous whistleblower's complaint against CEO and Managing Director Chanda Kochar. Vishwanath Nair and Ira Duggal join us on this big story. Vishi, let's start with you. What did ICICI have to say about this probe and how did we really get here?
Right, Ayush. So earlier today, the bank put out a statement on the stock exchanges where it said that it will appoint an independent and a credible person to lead a probe into possible impropriety, alleged impropriety. What they pointed out was that there were issues regarding code of conduct or alleged issues regarding code of conduct, which will be investigated by this person. This person will be appointed by the audit committee of the board, and this audit committee will also provide any kind of legal or professional support that this person might need for their investigations. The scope of this investigation will be comprehensive. We'll also look at emails and recording of statements if necessary, and any forensic investigation if necessary by this person. So essentially this was the statement, but it is important to know how exactly it is that we got here. So it all started firstly back in October 2016, which is when an investor named Arvind Gupta, who had some shares in ICICI Bank as well as Videocon Group, and he found some issues between the dealings between these two companies, and then he wrote a letter. He had written a letter to the Prime Minister back in March, and when he didn't hear anything, he put up a blog post in October 2016 where he described what the issues were. He essentially said that there were some business dealings between Venugopal Dhoot, the promoter of Videocon Group, and Deepak Kochar, who's Chanda Kochar's husband, and therefore there was some kind of there were code of conduct issues as well as some kind of improper dealings between the bank and the way they approved loans for the Videocon Group. Now, after this had come out, the bank did not respond to any of these claims. They in fact kept quiet for a very long time. The RBI is said to have done an investigation, not been able to find much in this case back in 2016. Then comes March 2018, which is when some media reports started floating around that there was a possible investigation against 2 private sector bank heads. Of course, the reports did not name anybody, but the social media buzz on it was that Chanda Kochar was definitely one of them. And again, this blog post that was put out by Arvind Gupta was shared widely and discussed widely. Then on the 29th of March is when the bank put out a statement on the stock exchanges. Suddenly, out of nowhere, they stated that the bank's board was fully in favor of supporting the MD and CEO of the bank, and that they did not find anything wrong in the way that the bank's officials as well as Chanda Kochar had conducted themselves with respect to the Videocon case. Now, nobody could figure out how this came out because this was nothing preceded this announcement. But what happened was on the 30th of March, in the morning of the 30th of March, the Indian Express put out a story where they discussed this particular case, where they said that there were some dealings between Deepak Kochar and Venugopal Dhoot, a series of transactions which were suspicious, and therefore they raised questions to the way ICICI Bank had approved loans for the Videocon Group. After this, on the 30th of March, the same day, the CBI also started something known as an initial inquiry against ICICI Bank as well as Chanda Kochar and the people associated with this case. An initial inquiry is something that happens before a full-fledged investigation. Following this, there were a lot of conversations between the CBI and various members involved in the case. But on the 7th of May is when the board had met to finalize the fourth quarter results for ICICI Bank, January-March quarter results. The wide expectation was that the board will pick up this issue and it will be discussed, and Chanda Kocher's fate will depend on this board meeting. But nothing of that sort happened. In fact, the government member of the board, Lok Ranjan, who was supposed to be the person who would start this conversation, did not even attend the meeting. And then Chanda Kocher, when she interacted with the press, said that nothing of this sort was discussed during the board meeting and that she doesn't have anything more to add to what the board has already mentioned. Then on the 25th of May, the bank put out a statement on the stock exchanges again saying that its MD and CEO, Chanda Kocher, as well as the bank had received a show cause notice from the Securities and Exchanges Board of India. They had earlier asked them questions about the Videocon case, to which the bank furnished some responses, but then eventually the markets regulator did issue a kind of a show cause notice, and therefore the bank was responding to that. So, these are the series of events that preceded the announcement that happened today. So, of course, this begs the question that why it took so long.
Right, Rishi. Thanks so much for taking us through that sequence of events. I want to take that point to you now that the bank's board has decided to conduct an external investigation. Would you say they've more or less redeemed themselves in this case?
Less, not more. Let me start from the beginning. I think there are two things to talk about here. One is the conduct of the board, which is not equal to the conduct of the CEO, and the conduct of the bank and the conduct of the CEO. These are all three separate entities, so you have to look at all of them. I think the board, when the first statement came out, when it was a statement of unequivocal support, a lot of people questioned whether the bank's board had looked into this deeply enough. The board said it had looked into it deeply enough, but they hadn't informed the exchanges that they were looking into such allegations against the MD and CEO. Then MK Sharma said that, we have done our inquiry, everything is fine, there are no issues of quid pro quo. When he came out in front of the press, he could not answer a number of questions. In fact, he confirmed that Chanda Kocher had not recused herself from dealings with the said companies, the Videocon group in particular. So there were a lot of questions doing the rounds as to whether the board had done enough to actually sort of protect the bank and not the leader of the bank. So in today's statement, the board has partially redeemed itself because it has now acknowledged and publicly informed investors that yes, we have another complaint, a second complaint, and we are now looking into this. So we are getting in an independent person to head an inquiry. This is different from an entirely independent inquiry because that independent person is going to be appointed by the audit committee of the board. Also, the audit committee is responsible for defining the terms of reference of this committee that's going to look into these allegations and the period over which they investigate. Remember, these are loans which date back many years. So the caveat that the terms of reference and the period of inquiry will be determined by the audit committee is something to take note of. But let's give them the benefit of the doubt and let's assume that this inquiry is entirely independent, in which case, yes, the board has partially redeemed itself. But has Chanda Kocher's position weakened? And to our mind, Chanda Kocher's position has actually weakened. The reason we say that is this. There is now a second allegation of a similar nature being made, that there are conflict of interest issues, that there have been quid pro quos in dealings with large corporate houses. For the leader of India's second largest private bank by assets, that is not a good allegation to have hanging over a head. And also now, one could assume that the board's support is a little bit more nuanced, given that they have put out this statement today. So if you take those two into account, take into account that a whole host of inquiries are still pending, then I think the assumption is fair that Chanda Kocher's position is still shaky. The board may have managed to redeem itself partially.
All right, stay with us. There's more from the banking space. Now, debt-laden IDBI Bank has come up with a turnaround plan. The lender, who's also been put under RBI's prompt correction action framework, wants to separate its corporate and retail banking operations. Sources tell Bloomberg Quint that IDBI Bank has already submitted this proposal to the government. Nikunjori reports.
The IDBI Bank has submitted a revival plan to the government seeking to demerge its corporate and retail lending portfolios. The plan was submitted by IDBI Bank 2 months ago to the government, and the government is also in favor of segregating or splitting the two operations of IDBI Bank. According to sources, this is one of the possible ways to address concerns of potential investors by segregating the corporate and retail lending portfolio of IDBI Bank. The government could then go ahead and sell its stake in a retail bank, which the government feels would get them better valuations and would have more takers. a separate entity for corporate loans, could then focus on resolving the stressed assets. Remember, the finance minister in his budget speech for 2016-17 had said that the government intends to lower its stake in IDBI Bank below 50%, and this plan would help them in reviving IDBI Bank and cutting its stake in the debt-laden state-owned lender.
All right, let's take that story further. Ira, now just how feasible would you say this move is by IDBI Bank?
So I think it's an interesting move, and just very brief context that this story of selling government stake in IDBI has gone back many years now. The government wanted to do it before the bad loan cleanup, and then from reports doing the rounds, investors noted that their quality of their book was fairly weak, and they did not want to get in. The quality of the book is weak on the corporate side. Now IDBI was a development finance institution at one point in time, then it turned into a regular bank, which is when it started to move into retail. About 55% of its book is still corporate, and a large part of the bad loans are centered there. So if they, in some sort of structure, manage to segregate the 88,000 odd crore in retail loans, the deposits that go with it, the branches and the ATMs that go with it, that book is relatively clean. So potentially the government can draw in an investor at the right price in that particular retail bank. The more tricky questions is what do you do with the corporate part of the book? You will have to get an entity, perhaps an ARC, to buy the bad loans, which are on the corporate book, but also have the other corporate loans, which are not bad, being transferred to another entity. So it's not as easy as it sounds. We are nowhere in a position to say that this is in advanced stages. This is a proposal put out by IDBI. The government apparently is not averse to the idea. The RBI may have bigger issues because they would want to know who is taking care of the stressed loan portfolio, which entity, and who is responsible for that. So it's a thought. We don't know if it will fructify.
Ira, thanks so much for giving us those insights and that analysis. Now, moving on, after hiking petrol and diesel prices for 16 days in a row, Indian Oil Corporation cut prices by 1 paisa today. The state-owned refiner had reduced petrol prices by 60 paise a litre and diesel by 56 paise earlier in the day, but rolled back most of the cut within hours, citing a clerical error. But you could escape the fuel price pinch if you lived in Kerala. The state government has decided to cut fuel prices by 1 rupee per litre. The price cut will come into effect from June 1st. Remember, state governments impose a VAT on fuel besides the excise duty levied on them by the centre. Now, to discuss this story further, we're joined by Kerala's Finance Minister, Thomas Isaac. Mr. Isaac, thank you for joining us yet again on Prime Time. Now, the last time you and I spoke, you said that the state's hands are tied, or state governments, when it comes to their finances, well, their hands are tied. You said that a state like Kerala would actually be prompted to move if the centre was to take an initiative and cut the excise on this. What has prompted your state to really take this decision?
Right. Because the entire price increase has been engineered by the central government, it is continuous increase that is affected in the excise duty. But there is no point in going on cleaning the center. So for some reason, they have decided to fleece the people. They are totally insensitive. And therefore, we have decided to take action on our own and given up the additional revenue that might occur to us because of the increase in the petroleum prices.
Right, Mr. Isaac. Now, also in our previous conversation, you said that the Modi government was intentionally increasing these rates only to make a grand announcement before elections. There was part of a bigger plan. If that announcement does come, and if prices do fall, and the centre takes that initiative, will you as a state cut rates further?
Let's see. But I hope there will be a big movement coming up in India to see that the central government is pushed back. Because now the action that we have taken, I am certain, is going to incentivize people across in India to demand that petroleum taxes be brought down.
All right, Mr. Isaac, really appreciate you joining us live on Prime Time. Now, moving on, Niti Aayog Vice Chairman Rajiv Kumar says that state governments are much better poised to cut taxes on fuel compared to the centre. He adds that the centre can look at cutting excise duty if the government finds the fiscal space. Listen in.
It is the state governments which are in a much better position to reduce their tax rates on petroleum products, because that's an average of about 27%, and it is levied on an ad valorem basis, so that as prices have risen, their revenues have gone up correspondingly. So that rather than continue to benefit from or continue to gather windfall gains, it will be much better for the state governments to cut their taxes and bring them down by 3 or 4%. In case the government can find some more fiscal space over and above the budgeted numbers, then it would be quite reasonable. It will be, in fact, it would be quite useful for the government to cut its own excise duties.
Now, the Modi government has seen massive gains from low crude prices over the last few years. But with rising prices, is the boon turning into something of a worry? Somit Sarkar has the analysis.
The bars in the chart show the value of the total import bill of crude oil, while the line denotes the total quantity of petroleum products imported during that year. Now, during the UPA 2 regime, the average oil import bill was close to around $133 billion US, while the average quantity imported was close to only 190,000 million tons. However, till FY18 in the NDA regime, if you see, the average quantity imported was close to 237,000 million tons, while the average annual oil import bill is close to only $95 billion US, which means that though the average annual imports have increased by 25%, the average annual import bill has come down by 28%. Now, that is because the Brent crude averaged around $97.85 per barrel in the 5 years of UPA 2 regime, while in the 4 years of NDA regime, it averaged around $61.3 per barrel. However, with Brent crude surging as much as 15% in the last 3 months and general elections being just a year away, the rising crude oil prices could prove to be a worry for Modi, as they threaten to increase not only the current account deficit but also stoke inflation.
Now, Tata Trust's R. Venkataraman says that the allegations against him are baseless. A day after the CBI named him in an FIR, the case relates to AirAsia Group manipulating government policies to get international flying licenses. Venkataraman is a non-executive director at AirAsia India, besides being the managing trustee of Sir Dorabji Tata Trust, and he's also responsible for management of Tata Trust. Venkataraman also blamed former Tata Group chief Cyrus Mistry for the accusations. He also said that he has been wronged by being named by the CBI because he had no role to play in operational matters. Now, New York-based MSCI, one of the world's biggest index compilers, is placing emerging markets, including India and Brazil, on notice for limiting investor access. Sajit Manga tells us the rationale behind this stance.
MSCI has come out with a new framework for markets accessibility, and this is a consultation paper which it seeks comments from all its clients. The clients are expected to come out with the comments by November 30th, and by the end of the year, MSCI is expected to come out with a decision. What the basic objective of this consultation paper is to seek investors or allow investors to have broader access to investment instruments. It also looks at any alternatives of either excluding fully or including fully any country in case there are some restrictions imposed by that country. Currently, there is as part of the restrictions, MSCI comes and downgrades that country from one category to another one. The MSCI seeks to bring in some kind of framework for this purpose. The concern is that in the recent past, especially in the case of NSE, monopolies and national monopolies and legal standings have led to countries curbing offshore instruments in other countries, and this in turn is reducing the accessibility of instruments available for investors globally. Countries which are under review as part of this framework would be Brazil, India, China, A-shares, and Korea. What MSCI is very categorically stating is that in the case of India, there are restrictions on certain offshore instruments being put up by exchanges based on certain indices, and the second one is the lengthy and burdensome regulatory regime wherein foreign investors have to come and register with market regulators SEBI. The proposal, what MSCI is proposing is that in case the participants agree, then MSCI is willing to cap the weightage of that particular country in case of market restriction comes in, and that would mean that within the entire index, there will be a limit to which any investor can invest in a particular country. Currently, as the weightage goes up, funds increase their exposure to certain countries, or as the weightage goes down, they decrease the weightage in certain countries, and this is what MSCI is trying to bring in some kind of cap in terms of some weightage here. The entire proposal, which is available on this website of MSCI, clients are expected to come out and give their comments on it by November 30th, and by end of the year we should be having a new framework which MSCI would be putting out.
Well, let's see what's happening in Europe. Now, European markets reeled under the political turmoil in Italy and Spain before stabilizing towards the close. You can see on your screens the FTSE and the DAX are in the green, but you can see that it's not a very rosy picture throughout. Now, Europe seems to be in a crisis, and Italy could be staring at fresh elections as early as July after negotiations between Five Star Movement and the Lega Party failed. Carlo Cottarelli looked set to form a temporary government, but that process also appears to have stalled. The crisis in Italy is also a crisis for the European Union. The whole saga saw all the parties blaming the European Union and has revived fears about the fate of the European financial system and its common currency. Now, Anne-Marie Houghton of Bloomberg News joins us live on the show from Rome. Anne-Marie, will the repeat elections turn into something of a de facto referendum on Italy's membership of the European Union?
That's where many are saying that if we do get fresh elections, which could come as early as July, it's looking likely now from what we're hearing that it would likely be in September, though, that this could be without question, a de facto referendum on Italy's place in the euro and Italy's place in the eurozone. The populists have made a campaign that was quite ambiguous about how they felt about the eurozone. There are Eurosceptics in these parties, but they weren't outright saying that they want to drop the single currency. But given the fact that a lot of this angst and unrest started from their signaling that they want a finance minister in the chair who's called the euro a German cage, who has created a plan B for Italy's exit, the fact that this is the person they want as a key role in their ministry, this is what sparked all the concern in the markets. So likely this next election will be about this key question, Europe's place in the eurozone. The problem is most Italians still want to be kept in the single currency.
Anne-Marie, and I just want to get your take on what kind of a role can the ECB play over here, considering the unstable sort of situation in the country and the region?
It's a really good question. The ECB is still buying bonds. They still have room left to buy Italian sovereign debt. And we have seen them start this OMT program when Greece was in a crisis. And just the starting of this OMT program, which would bring more liquidity and more help from the ECB to struggling nations, they never actually had to use it. So they still have things like the OMT in their back pocket. We still have quantitative easing till September. a question of whether that could be extended or not is on the table. But right now, there's nothing to be said from the ECB at the moment. But it's certainly a question that people in the markets are starting to think, because as you saw in the sell-off yesterday, I mean, markets are quite bouncing back today. But as you saw in the sell-off yesterday, this was the question everyone was raising, because it's not just about Italy. This had contagion across the globe. We saw contagion in the United States. We saw stocks fall in Asia. So it's not just an Italian question. It really becomes a European question.
Absolutely, Anne-Marie, and I have a couple of more European questions, so stay with us. Tomorrow will be the D-Day for Spain's Prime Minister Mariano Rajoy and the country's political stability too. The opposition party's bid to topple Rajoy seems to be gathering momentum. He'll face a no-confidence vote tomorrow. The battle is all set to go down to the last minute as 6 different opposition parties jostle for advantage ahead of a potential election. So, Anne-Marie, I want to understand from you, what's the mood in Europe like, and especially in Spain? Will Rajoy manage to spring a surprise? Who has the advantage, Rajoy or the other team, the opposition?
Well, I could tell you this, the mood in Italy is... The thing with Italy is this is their 65th government since the founding of the Constitution of 70-something years. So Italy not having a government, and Italy in some sort of political crisis or angst, is not really news for Italians. What is news is the fact that this could become, as we start off this conversation, about a referendum from Europe. And then what's happening in Spain as well just adds more angst to the market. Now what we're seeing is the periphery having contagion and risks. We have the risk in Spain with Rajoy facing a confidence vote, and we have the risk here in Italy. And we're still waiting to find out. I've been waiting all day to hear from the president, Mattarella. We still don't have an announcement. And a lot of Republicans saying that we could expect one this evening, but we still don't have an announcement. And then the two options really at this point is a political party from the winners that won on March 5th, Lega and Five Star, or a technocratic party led by Carlo Cottarelli.
Anne-Marie, just as a last question, just on Spain. Now, over the years, we've seen how the Catalan movement has gained traction. And considering what's happening now in Spain and the division amongst opposition parties as well, would you say that the Catalan separatism sort of movement will take center stage in Spain now?
I cannot say for sure that the Catalan movement will take center stage. This has been growing for years, but the fact that this was a key issue the past couple of months, and it really put Rajoy in the spotlight against others in his opposition. I think you can say that at least the fact that the Catalan movement is not going away.
Anne-Marie, thanks so much for joining us live from Rome. Now, moving on, Indian markets too extended losses amidst weak global cues. Both the Sensex and the Nifty incurred slim cuts. Agam Vakil sums up the day's market action for you.
So we're tracking mixed cues when it comes to the Indian equity markets a day ahead of the May expiry, with both the Nifty and the Sensex closing marginally in the red. In terms of sectors, while we did see the Nifty Bank advance, there was weakness in the Nifty Pharma Index. And M&M and Coal India were the two factors and perhaps stocks that led and kept the indices relatively buoyant. On the other hand, HPCL and Tata Motors were two stocks which bear down on the indices. Well, there were diverse moves when it comes to the broader markets too, and in the mid-cap space, we did see substantial weakness in Dilip Bilkon, despite the fact that we did have the management come and give us clarifications. We also saw CRISIL, on the other hand, move substantially higher, and that is also, gives us an idea of how we've seen the market span out, and potentially what we can expect as we move into expiry tomorrow.
Now, India may not yet figure in Tesla top boss Elon Musk's plans just yet. Replying to a question on Twitter, Musk said he'd love to bring Tesla to India, but cited regulations as a big roadblock. Now, employees of government banks are on a two-day strike that started today to protest their 2% salary hike, which they say is a meager one. Here's a special report of today's happenings.
The strike is mainly on a demand of wage revision, adequate wage revision. We have been observing since last 1 year we were at the negotiating table, persuading the bankers to give the adequate wage revision. But unfortunately, in a recently concluded round of negotiations on 5th of May, banks have offered meager wage rise of 2%, which is ridiculous. On that, employees have anger and anguish. Thus, we are on the streets today and tomorrow.
We don't deserve this meager amount of 2%. We want much, much, much higher.
What is that higher amount that you want?
30%. 30%.
And do you think like your demands would be met?
We are going to fight it out. That is by this UFPU.
But after 2 days, the strike is only for 2 days.
We will have our program. The program will be chalked out. We may go on indefinite strike also.
We are not at par with the central or state government which we are paid. Despite we are having holidays on 2nd and 4th Saturdays, we are still called to office and we are told to implement all government schemes, which will convert into NPS. And later on, because of this NPS, they tell we are not performing. But all the major corporate loans that are taken at a higher level, the decision is taken at a higher level. We are told to pass this loan. We are told to process it. And whenever there are division in the parameters also, financial parameters, still we are told to process all those loans. It was under the political pressure we are doing all these big loans and this all like government schemes. Otherwise, for a normal middle class person, if we just finance education loans, housing loans, personal loans, this don't convert into much of the NPS.
Around 1 million bank employees and officers representing public sector and certain private sector banks are on a 2-day strike starting today under the umbrella of United Forum of Bank Unions. The employees are on strike mainly to press for a demand of a wage revision which is due from November 2017. The Indian Banks Association, after negotiating for 1 year, has offered to give a 2% wage hike, which the employees have downright rejected, and they demand for at least a 20 to 30% wage hike. After the 2 days, the forum would once again convene to chart the next plan of action. And they have also threatened that if the demands are not met, they would go on indefinite strike.
Well, that's been an action-packed prime-time bulletin, and as you can see, problems in the banking sector are spilling over and impacting not just us customers, but also the bank employees themselves. But that's all the time we have on this show. Up next on Primetime Debate, the government is looking to set up a platform that will monitor and scrutinize social media platforms to analyze public sentiment, identify fake news, and the like. To understand the impact of this move, we'll be joined by Nikita Sood, Associate Professor at Oxford, Department of International Development at the University of Oxford, Anant Padmanabhan, Fellow Carnegie India, Pranesh Prakash, Policy Director at the Centre for Internet and Society, and Saket Modi, Co-founder and CEO of Lucidius Tech. Stay tuned.